We started 20 years ago as a long, short, small to mid cap biased hedge fund, and we still run that strategy today. Um, and that was launched in '06. In 16, about 10 years later, we did a self-analysis of what we had been doing right and wrong over the years. And although we had protected capital quite well in times of stress on our hedge fund, um, the amount of alpha that we had created on the short side wasn't really robust. We have a really good track record, not like eye-popping track record, but a strong one. So we sort of toyed with a couple different things, and we decided to get ourselves into the long-only business. And um, we got GIPS compliant as a firm, which is sort of like the good housekeeping seal of approval in the long-only space. And we started a long-only share class in our hedge fund. And then um, not that, you know, just so you have some sort of backgrounds, from 17 through 23, 2017 through 2023, we were literally the number one small cap manager in the United States out of 500 strategies. If you look at investment, whether it be for core growth or value, 24, and we had over 1,100 basis points of annualized alpha. And historically, we've had that sort of those sort of numbers. 24, we slipped up a little bit. We underperformed by about 300 basis points. And this year, we're sort of back to our old ways, and we're outperforming by over through June um, by over 1,000 basis points. And so on a 7-year trailing basis, we'll see. It's going to come out, I guess mid-month, that sort of thing on investment. But I think we'll certainly be top five out of 500 managers. So, uh, what we're doing is, although 24 we slipped up, is I believe is very repeatable. We keep coming to work, doing stuff that's very different than others, and so as I said, we have 1.1 billion under management, and 90% of that is long only. 10% of that is long short. The long short, look, as I said, it's a good track record. We're having a strong year there, but it's difficult because we're not a pod shop. We're not just a TMT shop. We're not just an industrials long short manager. We have a lot of industrial chemicals and materials exposure. We have a lot of software and hardware exposure, not much media, but we don't have anything in financials. We don't have anything or very little in healthcare. We have nothing in real estate, nothing in utilities, some consumer. We'd like to be bigger there. So we don't look like the index. We're not trying to act like the index. We have a very high active share. So on the hedge fund side, it's very difficult for folks to quote unquote bucket us. They don't know where to put us. So uh, we've had difficulty raising capital there, even though our record is strong. On the long only side, it's a very simple metric. Can you beat the Russell 2000 or 2500? And if so, by how much? And that's what we've done quite successfully. So the long only space is has its positives and negatives. Really, one of each is huge, right? On the positive side, um, the money is extremely sticky. It's 12 to 15 year typical hold period. That doesn't mean we have a 12 to 15-year lockup, but these people and institutions are very, very, very long term in nature. The bad news is the fee structure is not even close to what it is in the hedge fund world. It's a pit. So long only
On the
fees.
fee structure, sir.
It's you're lucky if you can get a flat 1%. You know, um, in terms of a flat fee, we prefer to get something more like uh, 50 bips and 15% of outperformance with a high watermark on outperformance of the
Okay.
of the benchmark, and the benchmark being the Russell or the 2020 or the 2500. So um, we think we're very confident, I should say, that we're about a third of the way towards our capacity. We're very confident we can manage $3 billion long market value, whether it be in the hedge fund or long only combined three.
Why do you think that?
Because two reasons. We've done a days to cover analysis of our portfolio, and based on the liquidity of our names, we can get out of or add to our names as quickly, as effectively, and as efficiently as anyone out there in the small cap space. And the only limitation is we don't really want to own more than 9.99% of any one company. So the limitation is 9.99%, and the rest of it we measure by days to cover analysis, like a typical hedge fund manager. And so our target is going from 1.1 billion to 3 billion.
Okay. Do you have any roadmap on how you will get there?
I'm sorry, sir. I'm sorry.
Do you have any roadmap on how you will get there?
No, I guess that's why I'm on the call with you today. Yeah, we're in business 20 years and our performance is quite good, but performance doesn't necessarily lead to um, tickets. And
You have
we're
already
talking.
seen that.
What's that?
I mean, you have already seen that in the market. Even if you have the best performance, it will not help you out with rising capital, correct?
Well, it helps you out for sure, but it's certainly not the be all and end all. We're talking to top university endowments. We're talking to top um, pension funds, um, very large family offices, um, you know, um, what do you call it? Like country funds, that sort of thing. And look, I think we're on each of these people's short lists, but as we've been in business long enough. You're not getting an allocation until they start doing operations due diligence. And so far, um, at the moment, none of these folks are doing operations due diligence, so we don't believe we're close on any of those allocations. That could change. We get a call on Tuesday, and that could change, but who knows?
Yeah,
But
understood. Since when are you engaging with them?
since when?
Exactly.
Well, everyone's different, right? Like we just like we just a couple of weeks ago were introduced to an extremely large um, fund in the Middle East. We've been talking to some university endowments for a year or two, and we've been talking to some university endowments longer than that. Um, we've been talking to some, you know, pension funds and health systems. And it's all varying, nothing's, one set, one amount of time. It could
Yeah,
be
but
anywhere.
it was over a year, correct?
Um, Not all. I'd say let's just call it 6 months to 2 years. That's what
6 months to
I
two.
would call I would call a real lead 6 months to 2 years. University endowments take no matter who you are, they take a very long time to move.
Mm,
They're very slow.
mm, understood. And the performance for the last 3 months, do you have any metric on it?
I'm sorry for the performance for the last 3 months. What?
Exactly. Do you have any metric on it? Do you know how much it was for the last 3 months exactly?
Yeah, did you get my email from about a half hour ago?
We'll take a look right away. Oh, right here, right here. Yes, I see it.
So this is our long only, and so
Okay,
we comp ourselves the um, versus the Russell 2000. So um, you could see year to date, which is 5 months here, but because
I
June
see
just
it.
ended, we haven't put it. We're outperforming by um, a wide margin, as you could see.
I see it. And right now, what the biggest challenge that you are facing today? Is it like having connection with an essential investors, or is it like having like qualified leads? What is it?
I would say it's. I think we probably have enough leads. I think it's But I mean, you never have enough leads. It's like raising money, right? If you're not raising, if if you're not raising money, then you're losing money. So yeah, I don't
Of
think you
course.
ever have enough leads. But and I'm not the expert, obviously, but I think it's conversion because it's a very um, it's a slippery slope. Like
Mm,
how much do you be how much of an annoyance do you want to be to these people because you don't want to be an annoyance, yet you want to feed them as much data as they could possibly want, you know? So we have all the data.
mm.
We have everything in the world you could possibly want. Attribution analysis, Brinson reports. We have everything. And some people ask for it, and then some people, they ask for it and they fade,
Who's taking the sales calls with them?
I usually do the first one because my partner, who's the CIO, doesn't want to be he doesn't want to waste his time because he's spending a lot of time, all his time on the portfolio. So
Mm,
I'll take the first half hour introductory call and I'll do everything except talk about names in the portfolio. And then if the person or the firm is still interested after that call, then we'll do a follow-up call with my partner on the phone and he does a deep dive. He's offers up a deep dive on any of the names in the portfolio that they'd like to talk about.
okay. And then after that, what's going on after that?
Usually after that, if they're still interested, they'll ask for some sort of data dump, whether it's attribution, whether it's positioning, whether it's a Brinson report. And then after that, it is sort of that fine line. Like, how often do you bug them? Do you want an update? So, um, we're not going to call them every week, and we're not going to necessarily call them every month. It's just
So are
not.
you are you doing the follow up from your own side after the second call, or is it like you are waiting for them?
After the second call, they usually ask for data. So
Mm,
we will send them data. And after we send them data, if we haven't heard from them, I'd say within 2 to 3 months, we'll send them an email or try and call them and see, if there's any additional data, what follow-up they want, what follow-up they want or would
okay.
like to move their process forward.
Okay. And how much have you already closed from this process?
Well, we're managing, what I mean, we've had this, unfortunately, or for better or for worse, we've had the same process for 20 years, right? So, um, we have 1.1 billion under management. So
Yeah,
that's the
that's a great what you have today. But do you think that's what will actually get you from 1.1 billion to 3 billion?
um, will what get me from 1.1 to 3?
I mean, the process that you currently have today, it gets you to where you are today, which is great, correct? But if you want right now to do the shift right now from 1.1 billion to 3 billion, it may be that you need actually to have completely new sales approaches, correct?
I'm sorry, that we'll need what?
It may be that it is that you need a completely new sales process on how you will get from 1.1 billion to 3 billion, on how you can close the deals, on how you can get the interest, convert the interest to new invest commitments in short time. Because right now, the main thing that you are actually beating on is the time right here. So the more you are waiting, the less time you have, or the less time that you can play with, correct?
Um, yeah, I guess, I mean, look, there's clearly something we could be doing better, a lot better. We know that, right? So that's why I sent you a text, right? We're interested in helping ourselves do something different um, to improve our hit ratio. Clearly, I don't think we're doing everything wrong. Clearly, our performance, we're not doing anything wrong, but that doesn't necessarily convert to assets. So I think we need to. I don't know if we need to totally change what we're doing, but I think we need to improve our messaging.
Hmm. Hmm. All right. And right now, how many existing clients do you have?
It's a fair question. I'd say, I don't know, 40 maybe.
40 clients. So you have check size of each client. What the average check size?
Yeah, I mean, if it's chunkier than this, right? But that
Mm,
would be, if you just do the, if you just do the average, that would make it, 25 million, right? But
exactly.
but it's, but it's chunkier than that. We have people who are smaller than that. We have people who are much larger than that. It's not a perfect
Understood.
world.
Understood. And the same existing clients that you currently have today, are they doing any re-ups today?
We have, we have a lot of longtime clients, and basically they keep their money in and they pay their taxes and they're very quiet and they're very happy. We have a few institutional clients, and I'd say one is actively adding, um, from time to time on a monthly
Mm.
basis.
And great. And today, are you getting any referrals from the same existing client?
No, that's the same question. The only refresh we're getting is from that one institutional client.
I mean,
The
no referrals at all. They are not providing anyone from their own network to your own
oh,
fund.
referrals.
Yeah, exactly.
Yeah, yeah, yeah. Our two largest clients definitely make a lot of referrals, but
Okay.
everyone, even their friends, are on different timelines. They move very slowly.
Mm,
Whether it be another, healthcare system or pension fund or university endowment, those worlds, they move, they're big tickets, right? So
mm,
they're not, they're not $1 million tickets. They're not even, those folks are barely even $25 million tickets. They're bigger tickets than that.
mm.
So, um,
Yeah,
so they move slowly, and I think they get, um, look, there's, again, you're more of an expert, far more of an expert at this end of things than I am, even though I've been in the business a long time. There's this fine line about pushing someone too hard and not pushing them enough.
sure.
And and I think
And I think
we
that's where you have an issue with today.
yeah, I think we can improve upon that.
Exactly. I think that you actually not pushing, and you don't want pushing, and you don't want to be a salesy. At the same time, you are not converting. So right now, you need actually to find the midline that will actually get you more invest commitment. At the same time, uh, you will also uh, you will also not harm your own brand or harm your own name or your own fund to not being like a pushy. I understand what you are thinking. Is that what you say?
Yeah, I think you're spot on there. I think you're
Exactly.
spot on.
Exactly. Okay, understood. And right now, what I can see right here is you need to have a system for the same existing clients that you currently have on how you will have a better communication with them. Okay, and you can clearly clean like between 10 to 20% from the same existing client refills and re-ups if you know how you will have a better communication channel with them and how you will have a better system on how you can convert them in a way better way. Do you think that you can get anything from the same existing client too?
Um, I think I think the one institutional client that's, adding will continue to add. I think there's another institutional client, that just spun off from a different institution. I think they will definitely be adding over time, but they need to grow their business. So we'll probably just be growing with them as they raise assets. So, um, I think we'll definitely get money from them. Um, I think we're definitely going to get another relationship from, the firm that they came from. Um, so I think that, but the individuals that have been with us a long time, um, I think, I think it's different with individuals. In my experience, most people say it's. I don't see. Over the years, we haven't seen our investors really add much over the years. They usually make their investment, they pay their taxes, right? So in a sense, they are growing. The assets are growing because they're not taking the money out to pay their taxes. They're
And
paying those.
understood. But
And
how many touch points do you have with them during this time after they have already invested into your own fund? I mean, do you have
not,
any events?
not
What are you doing exactly?
no, not much. We don't do much. So you're right.
Exactly.
Yeah, yeah,
That's the big reason, correct? I mean, the more they can see you, the more the trust they will have in you, the more upfront in their own mind you will be, correct? And the more money you will get. That's how it works. I mean, so I think maybe that's what you can leverage here after the call directly is you can leverage to have a system on how you will communicate with them in way better way. You don't need to be salesy or pushy at all. You just need to actually be more like, all right, they know that you exist more, correct?
yep.
Yes.
That's
And
fair statement.
yes. And since when have you been at 1.1 billion?
Um, I mean, we've been at it's been we've been um we've been at 700 million or more since since '01.
Since when?
'01, 2000.
Oh,
I mean 2000. No, not '01. 2021. Excuse me. My bad. I'm sorry. I forgot that.
2000,
Just 20 years between friends now. 2021. I'm sorry. So
2021.
yeah, since 2021, we've been 700 million or more. It's been a slow um, grind up from that point. Or I wouldn't say slow, but a nice grind up. I guess that's. But it hasn't been. Yeah, that's the best way to describe it. You know.
Yeah, I understand. And when you have already started the fund, it was like 20 years ago, correct?
Yes, but it was long short. We started the long only in 2017.
Yes, got it.
So it took about 4 years. Um, call it 5 years to get to 700 million for the long only, and then since over the last 4 years we've got another 400 million. Let's just say, or obviously profits. Both of them profits.
Yeah, understood. And I think you are leaving a lot of money on the side. I think that you have the capacity today to actually scale up to 3 billion easily uh, with the right system. Today, how many team members do you have?
Uh, Really, just five,
Oh, okay.
which is. But I'll tell you one thing. Maybe
Yeah,
we'll be six someday, but we don't need to be seven. It's a simple business, and
yeah.
um, we're not going to start hiring people just so we can say we've got an assistant, compliance person. Um, the bottom line is this, okay? We have um, my partner who's the CIO. At most, we've had two analysts working with him, okay,
Mm,
over the years, at most. That'll never get more than two because we've seen too many friends raise money, hire analysts, and they diluted the head person's talents and skills, and they blew up within 18 months. So we will not do that.
mm,
Even if it means we don't raise another dime, we will not do that. Um, and so we have myself. I'm part of the investment team. I do this. I do the trading. I do the risk management. I feed my partner ideas through screening and that sort of thing. Look, I've been around a long time. We started the fund together. And then other than that, we have uh, a CFO who has equity. He's been with us 10, 12 years. He's our CFO, chief compliance person. And then we have another guy, a young guy, who spends two-thirds of his time as a controller and another third of his time on marketing. But we have what I would consider to be the top partners in the business. So our prime broker, which only is applicable for our long short business, is Morgan Stanley. We have the number one fund services group, which is Morgan Stanley Fund Services, as our fund administrator. We've had the exact same auditor since inception, which is RSM. Now I know they're not a big four, but they're probably number five. Um, so, and the same ones you know, for 20 years, which I think is pretty damn good. We've had the same outside counsel for 19 years. In terms of compliance, we use two different outside firms as advisors. One is Kroll and one is Pillar. Pillar was an offshoot of Kroll, so we decided to use two. We have a great cybersecurity partner in Drawbridge Partners. They're considered number one in the space. And we have an IT consultant that does all our IT. And to be frank, I think most people hate their IT people. So,
Mm,
um, but they're okay. They're considered one of the best in the business, but they're only you know they're good. I wouldn't say they're, but I don't think anyone loves their IT person. They're
exactly.
outsourced IT people. So I think we have best of breed of all our partners. If we ever thought we needed another outside partner, we'd hire them in a second. Or if we ever thought we needed to replace one of them, we'd do it in a second. But to run $3 billion, we don't need 15 people in the office, and we don't want 15 people in the office. Um, we'd rather work smart, work hard, and let everyone get paid nicely, as opposed to um, pacify. I know there's a lot of box checkers out there on the buy side, and they want to see, a trader, an assistant trader. They want to see an admin and an assistant admin, and they want to see, you know, CFO, a controller, maybe even in-house counsel. You know, it's just that's not going to change. We're not. That's not negotiable. We are totally up for changing the messaging of how to raise money. But one message that's not going to change is the most we're ever going to have is six people in the firm. We don't need more.
Exactly. So, as you said right now, you are looking to change the messaging right here to raise capital. What do you think it has already? What do you think that it needs to be changed right here in the messaging exactly?
Um, I don't know. I mean, but you and I both agree that it's not performance, because clearly um,
No, it's not. It's not
it's not
correct.
performance. The only thing I think we could potentially get dinged on, um, by not having, quote, more people, would be on the concept of who's going to take over the fund, you know, if my partner gets pancaked by an 18 wheeler, you know.
Mm.
So succession, I think, um, is somewhat of an issue, in that sense. But you know what? Our portfolio is.
How old is he
How old is he?
exactly? Your own partner.
That's a great question. I think it's like 54, 55,
55. Yes.
something like that.
Yeah.
But he's in unbelievable shape. Um, like sick. I don't mean just like unbelievable health. I mean like great athlete. Six pack. Does yoga a few times a week. Hot yoga a few times a week. Plays basketball. He's in great shape. And you know what? Our portfolio is very liquid. And you know, God forbid if we had to liquidate the portfolio, you know, it's not going to be an issue. We would have,
Exactly.
it's like we're not looking to lock up the money on people, that sort of thing. We don't care about that because, if you don't want to be invested with us, we're going to give you your money back. And, long only money really isn't locked up. They're usually, maybe you have like a 30-day lockup. But, we've proven to our investors that we can out trade anybody, including State Street or those folks. So, like, even if they didn't want to have money with us anymore, let's just say it was performance based, right? They they're not just going to pull their money and have someone liquidate it for them. They're going to say, okay, guys, you know what? We've had a great relationship. You guys are good guys. It's time for us to make a change. We're going to give you, take 30 days, take 60 days, liquidate our portfolio as um, as effectively as you know how to do, and we'll move on. And just as an example, a couple of our larger investors, when they gave us money, it was interesting. They didn't give us cash. They gave us IWM, the
Okay.
Russell ETF, and they said, "Here's what I want you to do. Here's 100 million bucks of IWM. We want you to buy your names when you see fit. And as you buy those names, sell off our IWM. So buy $3 million of your names, sell $3 million of IWM. Buy $7 million of your names, sell $7 million. And eventually you'll get the portfolio that you like, that we're going to want, and we'll do it. So my best guess is someday, you know, 12, 15 years from now, when our investors, maybe they get tired of us or whatever, they're going to do the exact opposite. They're going to say, sell your names judiciously, and as you sell them, please buy us IWM, and when it's all over, at least we'll be indexed, and then we can figure out what we want to do with our money.
Exactly. Okay, understood. And right now, today, if you will just stay at 1.1 billion, I mean, you are at good position today. You are not like in very bad position, not at all. If you will
Correct.
just stay where you are today for longer time, I mean, how things would look for you?
Um, we'd be fine, but sort of what I alluded to earlier, I'm a big believer in this. If you're not raising money, you're going to be losing money. And the reason I say
Why do you
I
think that?
because people want money for all sorts of reasons, not because you're
Mm,
bad guys, not because your performance is poor. You know, some some woman might want to buy a new beach house, and she's going to take 20% of all her accounts that she's got out. She's going to take money from us. She's going to take money from, I don't know, it doesn't make a difference from whom, she's going to take money. So people have different reasons, you know, they're throwing a big wedding. They
yeah,
want to buy their kids a house. People have uses and wants for their money, and they should, people should, you don't live forever. And
exactly.
so that's why I say, if you're not raising money, you're going to be losing money. Maybe
That's
not day
completely
one.
right.
And so yeah, I think you raise a great point. Are we okay at 1.1 billion? Yes. But if we don't continue raising money, we will be losing money, and
Exactly.
that won't feel good. So
Exactly.
we want to continue, ratably. I don't need to go from 1.1 to 2 billion by third quarter. We don't need that.
Mm.
Um, would it be a great surprise? Sure. It'd be wonderful. We'd love it. But that's it. And so I don't know if I'm right on that, my statement, but
Absolutely, absolutely, you are right. I mean, today, if you want to continue being at the hedge fund industry and you want to stay a real player, you need to raise money all the time. I mean, you can't
yeah,
actually like shield down or like have a good time in some day in somehow. I mean, you need to keep rising money because if someone will actually get a bet of their own money, and that will start actually to create kind of like self-doubt in the fund. If it's like it was like a huge spike in the hedge in the management, it can actually has a huge effect on the trust of the investors, and it can actually create consequences that you need to avoid in your own current stage. Would you agree on that?
yeah,